This video is for educational purposes only and should not be considered financial advice. Awesome results from trading the Strat with EMAs. Outline: intro, EMAs and time frame, key considerations, examples, and recap. Intro. In this video, we will go over some awesome results we have been experiencing using EMAs with the Strat. Sometimes the most basic tool is the best tool for the job. This is the case with combining EMAs with the Strat. As you know, on this channel, we like to see how combining different trading systems can improve overall trading results. After backtesting the Strat with 2 EMAs, we found that the results were pretty astounding. EMAs and time frame. The 2 EMAs we used were the 200 EMA and the 500 EMA. We also used the 15-minute time frame. Key considerations. Some of the key things to remember when trading these 2 systems are: never trade when the EMAs have flatlined. Only trade when the EMAs are angled in a specific direction. Use the bar counting method to help determine the direction. We will go over that in a minute. When price is pulling away from the EMAs, especially for the first time after consolidation, look for price to retrace back to them using the Strat patterns. When price hits the EMAs after coming back, look for a move away if the EMAs are angled up or down. Examples. Let's take a look at some examples of how EMAs can help you with the Strat. In this example, you see how the EMAs have flatlined. This means do not trade. This is Nvidia, and during these days of the week, we can see that price has consolidated. The 200 EMA, which is this magenta line, and the 500 EMA, which is this red line, have flatlined. There is no angle of direction. Here we see after a few days, price broke structure, and the EMAs have now started to angle downwards. We have now zoomed into that day where the EMAs have started to angle downwards, and we see at the open, price makes a move to the upside. Again, this is the 15-minute chart. So during the open, you can see open, high, and then low and close. Once we see the high is formed, which takes out liquidity right here, we can look for a trade to the downside. Because again, our 200 is angled down, so we are bearish on our Strat patterns. You could have taken the trade right here after price broke this level, which is a 2 down, and this is a 3, or a 2 gone 3 to the downside. Or you could wait for this 3, and then once the bottom of that 3 is broken, you have a 3-2 Strat pattern to the downside. The next day, we see how price has tried to make it back to the 200 EMA. However, we see this big move downward. Now going back to our bar counting method, we can count the number of bars between this opening bar and when the last time price touched the 200 EMA. And if we look and see where that happened, price touched this magenta line all the way back here, and we can count that all the way to this point in price, and that's 183 bars. As you know, a moving average measures the average of price movement over a certain number of candlesticks. And we see this moving average starts angling down. So going back to this day of trading, you can surmise that since we have not hit the 200 EMA and we are not at 200 candlesticks yet, we can look to trade to the downside. We are still bearish. So again, on the open, you see how price took liquidity and then broke lower, breaking this 2 candle to the downside, creating another 3-2 to the downside. Now, if you missed that trade, you can look for this trade, which is a 2 up, 2 down pattern. We see this candle is a 2 up, and then this candle breaks that candle's low, making it a 2 down. And you could have taken that move to the downside, which is this bottom right here, creating the broadening formation. Now, I put this strat pattern in just as a frame of reference. If you were looking for a trade to the upside, where this is a 2 right here to the downside, and this is a 2 up, that trade did not work out because we are still below the 200 that is angled down, and we have not hit 200 candlesticks yet. So we're not looking for bullish trades. We're looking for bearish trades. And when you see a large move to the downside, you don't look to get in to the downside right after that down move, because we've already taken this liquidity. So price would normally need to retrace to the 50% level of this candlestick, which it does here, and then creates that 2 up, 2 down pattern. So these are little nuances just to be aware of when you're trading the strat and you're also using EMAs. Get acquainted with how price moves. When price moves outside of a swing low or a swing high, it tends to retrace. And depending on the context, it may retrace all the way in or all the way to the other side to create a broadening formation. And this just retraced all the way into 50%. It didn't go all the way back to the outside. So continuing on, we see price has still not touched the 200 EMA, yet it has created 243 candles. So on this day, you might look for a move to the upside, and you get this big hammer candle, and then price breaks the top of that candle to move back to the 200 EMA. This is a perfectly legitimate trade. However, it is a loss, and you want to make sure that you put your stop loss below the body of the candle, not the wick, because you would have had a huge loss if you would have done that. So you put your stop loss below the body of the candle, and you have a small loss. Whereas you've seen the previous days, our wins were pretty big. So just know that every system is not 100%. But if you have rules in place, you will still grow your account. Now we see we have a break of structure, and then when price opens during the New York session, we see there is a move to the downside, and this is already a 3 candle engulfing this 2, and we have just touched the 200 moving average. This is a perfectly legitimate trade to the downside. However, when price moves that long away from the 200 and has not touched the 500, it usually tends to go back to the 500 at the halfway point. Now, it may not go all the way back, but it tries to make an attempt to go back to the 500. And we have been away from the 500 for 255 bars. So taking this move to the downside would have been a loss. But getting right back in once it breaks this level, you had a 2 gone 3. Going to the downside, this candle would have been a 2. As it opened right here, it would have been 2 to the downside. But then it retraced and then went green and took out the top of this 3 candle. And that's basically a 3-3 pattern that is not included in the strat, but we've seen these a lot. As we mentioned in our previous video, it's still within the concept of the strat, which is the broadening formation, where you'll have a 3 candle and then another 3 candle right after that. So price moves to the upside and head straight towards this 500 EMA. And you could get in right here, which is during the 9:30 time period, between 9:30 and 9:45. And if you miss that, price retrace right back to your entry, and you could have got back in and went all the way up to the 500 EMA. In our last example, we see price again consolidates, and we see that the EMAs have flatlined. We do not trade during that time period. Then once price has broken structure and the EMAs are angled down, that gives us a clue to start trading. So we see this 9:30 time slot. Price again takes liquidity. It becomes a 2, but then it goes 3. And you could enter again right when price clears this 2 candle and catch that move to the downside. Now price does retrace right back, giving us a 3, 1, and then a 2 to the upside. Now do not get faked out in this circumstance. If you get a 3, 1, 2 to the upside, that is totally out of context. We just saw that we broke structure to the downside, and we have the EMAs angled down. This would not be a bullish trade. So we see price again pulls back in to the range and then creates a 2 up, 2 down pattern. And that's where you can enter right here on the 2 down candle and take that all the way to the downside right at the end of the 12 o'clock hour during New York. To recap, the 200 and 500 EMAs on the 15-minute chart can help you increase your win rate with the Strat. It is a lot simpler than some of the other complex trading systems. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more trading tips and strategies. Don't forget to hit the notification bell so you never miss an update. Until next time, happy trading.